come study with me. Come and study with me. Yeah, late nights, clean notes. I want the whole load. Gold pen on the page. Big dream, small cage. Put some credential behind your name. Walk in that room and own the frame. This is your time, your season to grow. One step at a time, watch your future glow. Yes, you can do it, yes you can. Rise from the doubt and make your stand. From high school diploma to EA, CPA, DBA. I see the fire, I hear you say, come study with me. Come study with me. Come and study with me. Come and study with me. Come and study with me. Put your name on top, put your name on top. This is your season. This is your season. Yeah. Library cards, fresh highlighters, head down focus, future fighters. One more chapter, one more try, one more test, one more why. From high school diploma to EA, CPA, DBA. That's the climb, that's the way. This is my goal. What is yours? Open that door, unlock more. Yes, you can do it, yes you can. No more fear, just make the plan. Put some credential behind your name. Move with purpose, play that game. Come study with me, come study with me. Come and study with me, come and study with me. Come and study with me. Put your name on top, put your name on top. This is your season, this is your season.
All right, everybody. Welcome back to Come Study With Me here at It's Possible Podcast. Today, again, we're going to spend a couple hours together. We'll be studying. There is no break. All right, so this is what we do. So we are on track. All right, so go ahead and get your book, your notebook, your pen, your pencil, whatever you use to study. This is the time to study, to put some credentials behind your name. All right, so let's get it going. I'll see you in a minute. So it's time to work. unexpected loss on disposal is recognized immediately. Any expected loss on disposal is recognized exchange rate was 0.20 per pula, 20 cents per pula. On December 31st, year 1 candles year end, the spot rate was 19 cents, but the rate increased to 22 cents per by February 1st, year 2. When payment was received, how much should candle report as foreign exchange transaction gain or loss as part of the should be allocated 60% to inventory and 40% to goodwill. On January 2nd, year one, the fair value of treasury sale regular true values was 10,000. Most January 2nd, year two consolidated balance should be consolidated balance sheet. In a business combination, assets and liabilities of the acquiree, the subsidiary, are purchased at fair market value on the acquisition date. The combined company is viewed as a single economic entity because all of its resources are controlled by the acquirer. By the parent, consolidated financial reporting is required in all consolidations. Used acquisition method. On the transaction date, fair market value of the acquiree identifiable assets needs to be calculated, determine the book value of the net asset purchased to identify non-controlling interest. Allocate consideration in excess of book value to identifiable asset and goodwill. Calculate fair market value of help me understand what's going on. Help me understand the idea that's been discussed and why the answer is $46,000. This is a consolidation question. Pope buys 90% of trust, so Pope now controls trust because acquirer and the acquiree. Yes, when there is control, usually more than 50% ownership, the parent company consolidates the subsidiary by combining asset, liability, revenues, expenses of both companies. So in this problem, Pope owns 90% of stress. That means Pope controls stress. Therefore, on the consolidated balance sheet, Pope reports combined asset, Pope's asset plus stress, combined liabilities. Big consolidation idea. Think of consolidation like this: the parent and subsidiary are presented as one economic company, even though legally they are separate businesses. For financial reporting, they are treated like one big company. So combined asset, combined liabilities, combined revenues, combined expenses. But important exception, we do not simply add everything blindly. Some accounts must be eliminated. For example, investment account elimination. Pope's investment in trust gets eliminated against trust equity because you cannot own yourself in consolidation still. Okay. I believe that's what I was confused about. Simple mental picture. Imagine parent equals big backpack, subsidiary smaller backpack. Consolidation means dump both backpacks into the table, combine everything, remove internal duplicates. Okay, show outside ownership separately as non-controlling interest. As non-controlling interest. Okay. Alright, I love the idea of the buyback, but now if the parent company is going to own 100% of the asset and then 100% of the liabilities, and they only own 90%. So how do you show outside ownership separately as non-controlling interest? That's one of the deepest idea in consolidation accounting. You're basically asking if the parents reports 100% yes of the subsidiaries asset and liabilities, how do we show that part of it still belongs to outside owners? Yes. So this brings me back to the idea of asset equals liability plus owner's equity, because liability plus owner's equity. The parent company reports 100% of the asset because they own the asset, but part of the equity is not theirs. Is that correct? Okay. So, okay, yes, asset equals liability plus equity. So that is exactly the right framework. The key idea: the consolidated company reports 100% of the subsidiaries' assets because the parent controls those assets. Control is the key consolidated control. Okay, you don't own it, but you control it. You control 100% of the asset. Right, so the parent company controls 100% of the asset, but they don't own the equity. So 10% of the equity of the asset belongs to non-controlling or outsiders. So it does not belong to them, but they control 100% of it. If they own more than 50% of the subsidiary. Make sense? But we must also report that part of the ownership claim belongs to outsiders. That ownership claims becomes non-controlling interest. Okay. Makes sense. What amount should be reported as cost of goods sold in the consolidated statement of income? Okay, what amount should be reported as cost of goods sold? You have total code owns 100% of basic codes outstanding common stock. Okay. Tulip's cost of goods sold for the year total 600,000, and Daisy's cost of goods sold 400,000. During the year, Tulip sold inventory costing $60,000 to Daisy for statement of income. It was $60,000 to Daisy for 100,000. The question is testing one of the most important consolidation ideas. Intercompany sales must be eliminated. Okay, intercompany sales must be eliminated. So, during the year, Tulips sold inventory costing $60,000 to Daisy for $100,000. So this is eliminated. Eliminated. Okay. Because from the perspective of the consolidated company, you cannot sell inventory to yourself. I understand. So, Tulips 600,000. That's 1 million. But wait. Identify the intercompany sale. Tulips sold inventory to Daisy. Cost to Tulips 60,000. Selling price to Daisy is 100,000. That means Tulips recorded sales 100,000. Cost of goods sold 60,000. Daisy later recorded cost of goods sold 100,000 when sold to outsiders. Big consolidation idea inside the consolidated company. Okay. Let me see what to see here. It's $900,000. This I need to go over and over again. What happens since inventory? Alright, so the answer is $900,000. $900,000. So how did we get to that answer? intercompany transaction must disappear. The 3Y eliminate 100,000. This is the key. This is $400,000. Cost of goods sold includes the 100,000 purchased from Tulip. Okay. Okay. But from consolidated viewpoint, it was not an external purchase, it was an internal transfer. So you gotta remove that 100,000. You report 100,000. So practically, we eliminate the intercompany transaction because during the year, Tulip sold inventory costing $60,000. It cost Tulip $60,000 to Daisy for 100,000. That $60,000 it already exists in the $600,000 of Tulip, right? But the $100,000 is also reported in the $400,000 of Daisy. So in this case, we need to eliminate that $100,000 to make it. But what is the idea that if the product has been sold to outsiders, we need to keep the cost of goods sold? Transfers inventory to Daisy and internal transfer, and Daisy reports $100,000 for that. This is not a real sale economically. From the consolidated perspective, inventory merely moved internally, no outside customers yet. So internal revenue is fake. Internal profit is fake. Internal purchase is fake. Daisy sells to outsiders. Now a real external sale happened. At this moment, inventory leaves the consolidated entity. The consolidated company truly incurred cost of goods sold. So we must recognize the real original cost, which is $60,000. Okay. Even dealing with the $100,000 cost of goods sold of Daisy. It is eliminated. In any case, it will be eliminated. But what we are really working with is the $60,000 that it costed Tulip. So in the case where Daisy didn't sell everything, that only 60% was sold of the inventory, how would we report that? The 100,000 internal transfer price is fake from consolidated viewpoint. The real economic cost is 60,000. Okay, now transferred inventory was sold externally by year end. That means 60% left consolidated group, 40% is still sitting inside Daisy's ending inventory. Step 1, determine original cost and internal profit, internal transfer cost. I think we're gonna have to come back. Start this deeper. I just carried past it before eliminating 320 subtract unrealized profit. Before eliminating interest, go ahead consolidated carried past it of 320. What amount shall collect report on its December 31st year one? It shows that both computers were connected today. Did you have internet on your computer today? Because it shows that it says last connected 11 minutes ago. And the other Chromebook last connected 5 minutes ago. And they're not paused. There should be something going on with your computer. When a company parent owns a controlling interest greater than 50% in another business, that means subsidiary, you must consolidate that subsidiary's financial statements. This produces a single consolidated set of statement for the entire accounting entity. As part of the consolidation process, transactions between companies in the consolidated group, known as intercompany transactions, are eliminated. Such transactions have the potential to distort overall financial results. Consolidation procedures All right, all right. We are we on break right now. Oh, let me see. We on break right now. So it's time for break, everybody. If you're watching with me, you're studying with me, it's time for you to go ahead and take a break. We're going to take a 10 minutes break and then we'll be back in 10 minutes. Okay. So after that, we may do another 1 hour and then we will close. Okay. But let's go ahead and do it. Thank you.
Yes, you can do it, yes, you can. Rise from the doubt and make your stand. From high school diploma to EA, CPA, DBA, I see the fire, I hear you say, come study with me, come study with me. Come and study with me, come and study with me, come and study with me. Put your name on top, put your name on top. This is your season, this is your season. Yeah. Library cards, fresh highlighters, head down focus, future fighters. One more chapter, one more try, one more test, one more why. From high school diploma to EA, CPA, DBA, that's the climb, that's the way. This is my goal, what is yours? Open that door, unlock more. Yes, you can do it, yes you can. No more fear, just make the plan. Put some credential behind your name. Move with purpose, play that game. Come study with me, come study with me. Come and study with me, come and study with me, come and study with me. Put your name on top, put your name on top. This is your season, this is your season. From the first page to the final light, I want your future to feel this bright. No wasted years, no empty pride, just a bigger life on the other side. Come study with me, come study with me, come and study with me, come study with me. Put your name on top, put your name on top. This is your season, this is your season. This is my goal, what is yours? Come build that dream and open doors. Come study with me. Come study with me. Come study with me. Come and study with me. Yeah, late nights, clean notes. I want the whole lot. Gold pen on the page. Big dream, small cage. Put some credential behind your name. Walk in that room and own the frame. This is your time, your season to grow. One step at a time, watch your future glow. Yes, you can do it, yes you can. Rise from the doubt and make your stand. From high school diploma to EA, CPA, DBA, I see the fire, I hear you say, come study with me, come study with me. Come and study with me, come and study with me, come and study with me. Put your name on top, put your name on top. This is your season, this is your season. Yeah. Library cards, fresh highlighters, head down focus, future fighters. One more chapter, one more try, one more test, one more why. From high school diploma to EA, CPA, DBA, that's the climb, that's the way. This is my goal, what is yours? Open that door, unlock more. Yes, you can do it, yes you can. No more fear, just make the plan. Put some credential behind your name. Move with purpose, play that game. Come study with me, come study with me. Come and study with me, come and study with me, come and study with me. Put your name on top, put your name on top. This is your season, this is your season. From the first page to the final light, I want your future to feel this bright. No wasted years, no empty pride, just a bigger life on the other side. This is my goal, what is yours? Come build that dream and open doors. Come study with me. Come study with me. Come study with me. Come and study with me. Yeah, late nights, clean notes. I want the whole load. Gold pen on the page. Big dream, small cage. Put some credential behind your name. Walk in that room and own the frame. This is your time, your season to grow. One step at a time, watch your future glow. Yes, you can do it, yes you can. Rise from the doubt and make your stand. From high school diploma to EA, CPA, DBA, I see the fire, I hear you say, come study with me. Come study with me. Come and study with me. Come and study with me. Come and study with me. Put your name on top, put your name on top. This is your season. This is your season. Yeah. Library cards, fresh highlighters. Head down, focus, future fighters. One more chapter, one more try. One more test, one more why. From high school diploma to EA, CPA, DBA. That's the climb, that's the way. This is my goal, what is yours? Open that door, unlock more. Yes, you can do it, yes you can. No more fear, just make the plan. Put some credential behind your name. Move with purpose, play that game. Come study with me. Come study with me. Come and study with me. Come and study with me. Come and study with me. Put your name on top, put your name on top. This is your season. This is your season. From the first page to the final light, I want your future to feel this bright. No wasted years, no empty pride. Just a bigger life on the other side. Come study with me. Come and study with me. Come and study with me. Come study with me. Put your name on top, put your name on top. This is your season. This is your season. This is my goal, what is yours? Come build that dream and open doors. Come study with me. Come study with me. Come study with me. Come and study with me. Yeah, late nights, clean notes. I want the whole load. Gold pen on the page. Big dream, small cage. Put some credential behind your name. Walk in that room and own the frame. This is your time, your season to grow. One step at a time, watch your future glow. Yes, you can do it, yes you can. Rise from the doubt and make your stand. From high school diploma to EA, CPA, DBA, I see the fire, I hear you say, come study with me. Come study with me. Come and study with me. Come and study with me. Come and study with me. Put your name on top, put your name on top. This is your season. This is your season. Yeah. Library cards, fresh highlighters. Head down, focus, future fighters. One more chapter, one more try. One more test, one more why. From high school diploma to EA, CPA, DBA. That's the climb, that's the way. This is my goal, what is yours? Open that door, unlock more. Yes, you can do it, yes you can. No more fear, just make the plan. Put some credential behind your name. Move with purpose, play that game. Come study with me. Come study with me.
All right, so we are back to work.
Come and study with me. Put your name on top, put your name on top. This is your season. This is your season.
We are back to work. We're gonna do another hour of deep focus, and then after that hour we will close the live. So get undistracted so that we can flip some pages. All right, everybody, I'll get to work right now. I'll see you in a minute. That means the cost of goods sold for Kent is $192,000. So how do you connect that? I'm still trying to understand this. Okay, step one. What happened? Kent sold inventory to Clark. Selling price is $240,000. Kent gross profit is $48,000. And you correctly realize that sales minus cost of goods sold equals is gross profit. So $240,000 minus cost of goods sold equals $48,000. 192,000. Yes, that means Kent originally spent 192,000 to make or to buy the inventory. Then Kent sold it internally to Clark for $240,000, creating internal profit of 48,000. Okay, so we need to focus on the profit. Why this is a problem? Because Kent and Clark are one consolidated company. So from the consolidated viewpoint, Kent did not really make a sale. The inventor, okay. The important part, Clark still has $60,000 of that inventory at year end. That means some of Kent's internal profit is still trapped inside inventory. The inventory value includes real cost plus fake internal markup. Step 4. Find the profit percentage. Kent sold inventory for $240,000. Profit $48,000. Profit percentage 48 is 20%. Okay. So the profit percentage is 20%, meaning every inventory dollar contains 80% real cost. Alright, so profit percentage is 20%. If profit percentage is 20%, you still have $60,000 of that inventory. 20% of that remaining inventory is 60,000, so 20% of 60,000 is 12,000. Unrealized internal profit. Why unrealized? Because the inventory has not been sold outside the consolidated. The profit is still inside the family. No outside has paid for it yet. The deep connection you're asking about, how do we connect the 192 cost? Here is the connection. The consolidated company should carry inventory at original consolidate, not inflated internal price. Kent true cost 48,000. Clark has 60,000. That's a remain. Okay. We have 48,000 is 20% of 240. So that being the case, 20% of 60,000. 20% of 60,000 inventory. I don't get it. I don't know if I can get that. That'll be good. So help me understand. Okay, so here's what I'm having in my mind right now. Purchases of raw materials totaling $240,000 from Kent Corp, a wholly owned subsidiary. Kent's gross profit on the sale was $48,000. Clark had $60,000 of this inventory remaining on December 31st, year one. Okay. I understand 48,000 is 20% of 240. Now, how do I connect this 20% with $60,000? Like the $60,000 of inventory that's of the remaining inventory. This is the exact point where consolidation clicks for most people. You already understand sales price is 240,000, profit 48,000, profit would say the cost or the revenue inside of the consolidated company. So now we need to resolve this inflated $48,000 profit and reconcile that with the inventory that is remaining. Okay, help me understand that. Finally, seeing the real issue. The entire problem is about removing fake internal profit. That is exactly the heart of it. You sharpen your word. Okay, what actually happened? Kent sold inventory internally to Clark. Kent recorded revenue, profit, but from the consolidated viewpoint, the company sold it to itself. I understand that. So the $48,000 profit is suspicious. Yeah. Accounting asks how much of this profit is real and how much is still fake. Why is the profit fake? Because no outside customer bought the inventory yet. Okay. Inside. The inventory is still sitting inside Clark, inside the consolidated company. Economically, the company still owns the goods. Purchase raw material totaling $240,000 from Kent Corp, a wholly owned subsidiary. Kent gross profit on the sale was $48,000. This is a fake $48,000. Alright, but have a good night. So that was a fake $48,000. Clark had $60,000 of this inventory remaining on December 31st, year one. December 31st, year one. Had $60,000 of this inventory remaining on December 31st, year one. December 31st, year one. So, okay. Before eliminating entries, Clark has consolidated current asset of $320. What amount should Clark report December 320? but we still have $60,000 left in stock. If we still have $60,000 left in stock, should we report the whole $60,000, or should we remove the $20,000 fake profit? I think I'm getting it. The entire internal sale. Kent sold inventory internally for $240,000. Inside that $240,000, real cost is $192,000. Fake internal profit is $48,000. Correct so far. Step. What happened to the inventory? Not all the inventory remained. Clark only has $60,000 of the inventory left. Okay, at year end, meaning most of the inventory was already sold externally. So part of the fake profit became real because outsiders bought part of the inventory. This is the key. The only fake profit remaining is the part still trapped inside the unsold inventory, not the entire $48,000. Yes. The remaining inventory is $60,000. How much fake profit is inside this remaining inventory? Okay. Since every inventory dollar contains 20% profit, the remaining inventory also contains 20% fake profit. Now extract 20% of 60,000. It's 12,000 fake profit that you have to remove from that $60,000 remaining inventory. 60 minus 12 is 48. Okay. Should we report the full 60? No, because 12,000 of it is fake internal profit. So consolidated inventory should be reduced by 48,000. I thought it was gonna be reduced by 12,000. The true consolidated cost. Simple way to think about it. The 60,000 inventory is carrying an inflated price tag. So the consolidated inventory should be reduced. Well, here I was thinking that the inventory should be reduced by 12,000. So before eliminating entries, Clark has consolidated current asset of 320. Okay, I see. Okay, so when we remove the $12,000 from 320, that's why we have 308. Okay, that makes sense. All right. I think I got it. Yeah, I think I got it. Okay. Intercompany receivable consolidated balance sheet. What amount should write report as intercompany receivables that are included in its consolidated financial statements? And it's December 31st, year 1. Trial balance. Write ahead the following intercompany balance before eliminations. Current receivable from main co-subsidiary 32,000. From a subsidiary. But they don't. Oh, it's a subsidiary anyway. It's consolidation. Non-current receivable from main co-subsidiary 114,000. Cash advance to Cornco subsidiary. Intercompany payable to Kinco subsidiary. In December 31st consolidated balance sheet, what amount should write report as intercompany receivables? Why? Intercompany receivables. Current period receivable to from main subsidiary to intercompany receivables payables are eliminated completely because from the consolidated view, when a company cannot owe money to itself, that's right. So let's look at accounts. Right has receivable from subsidiaries, current receivable from main 32,000, non-current receivable 114, cash advance to Cornco 6,000. These are all intercompany receivables. Then we see amount owed to subsidiaries. Cash advance from King 15,000. Intercompany payable. Cash advance from King 15,000 in intercompany payable to Kinco subsidiary. Okay. These are intercompany payables. Big consolidation idea. Inside the consolidated company, these are just one entity owing another entity inside the same family. So consolidation says remove all of them. Why, imagine this. Your left pocket owes your right pocket $100. Do you really owe yourself money? No. Same idea. Therefore, all intercompany receivables, payables, advances are eliminated. So final answer is 0. Okay. So if it's a subsidiary, intercompany, whatever it is, consolidated balance sheet, what amount should write report as intercompany receivables? There is no receivable as intercompany. Makes sense. Makes sense. Makes complete sense. You cannot owe money to yourself. Right? You can't owe money to yourself. 750,000. Pain 100,000. Sky. What amount of retained earnings should Payne report in its December 31st Year 2 consolidated balance sheet? Retained earnings January 1st Year 2. So you're going to combine them. 3,200,000 plus 925,000. Subsidiaries retained earnings. Compute Payne's ending retained earnings, beginning retained earnings, 3,200,000. Add Payne's net income, 800,000. Subtract Payne's dividend, 750,000. 3,250,000. Why don't we add Sky's retained earnings? This is the key consolidation concept. When Payne acquires Sky equity accounts were eliminated in consolidation. That includes common stock. Okay. Retained earnings are an important idea. Okay. 3,456,000. Okay, so something that I need to understand here. Some of them you consolidate, some of them you eliminate. Retained earnings of the subsidiary are eliminated. So understanding that assets, liabilities, and what else, you need to add them together. But when we talk about retained earnings, we talk about net income, we talk about dividend declared. We do not add them. Alright, help me understand that. Okay. That is the core logic of consolidation account. What consolidation is really doing? Consolidation is trying to present one economic company. So we combine assets, liabilities, revenues, expenses. We combine asset, liabilities, revenues, expenses because these represent the operations and resources of the entire control group. Step 2. But equity is different. This is the important part. The subsidiaries equity accounts, common stock, retained earnings represent ownership claims inside the group. But once the parent buys the subsidiary, the parent's investment in subsidiary already represents ownership of the subsidiary's net asset or equity. This is the key. Okay. All right. I need to take some notes. Assets, liabilities, revenues, expenses, you combine them. But when it comes to common stock, retained earnings, you eliminate the you eliminate the part of the subsidiary, like a subsidiary retained earnings and parent investment account. We would double count ownership. Okay, we would double count ownership. So are we saying that retained earnings of 3,200,000 already includes the 925,000 of Sky? No, directly. This is the subtle part. Paying $3,200,000 retained earnings does not literally contain Sky's 925,000. But when Payne acquired Sky, Payne recorded an investment in Sky account, and that investment already reflected the value of Sky net assets, equity at acquisition. So in consolidation, Sky's equity accounts are eliminated because the parent's investment already represents ownership of those net assets. Okay, this is the big idea. Sky's 925,000 retained earnings existed before acquisition. That is considered pre-acquisition equity. Okay, so retained earnings. Okay. Got it, we got it, we got it. We got it. Acquisition, the investment account, acquisition account, goodwill calculation, fair value allocation. Asset liabilities revenue. Simple memory rule. Add asset liability definition, you add assets, liabilities, revenue, and expenses. You eliminate investment accounts, subsidiary equity accounts. Okay. subsidiary equity. Retained earnings. Net income. Net income. Dividend declared and paid. Okay. All right. January 2nd, year 2. I should have done that. Okay. On January 2nd, year 1, PeerCo purchased 75% of KidCo's outstanding common stock. During year 1, Peer and Kid paid cash dividends of $25,000 and $5,000 respectively to their shareholders. There are no other intercompany transactions in its December 31st year 1 consolidated statement. Retained earnings. What amount shall Peer report as dividend paid? January 2nd, year 1, PeerCo published 75% of KidsCo outstanding common stock. During year 1, Peer and Kid paid cash dividend $25,000 and $5,000. So I'm gonna say here 25,000 because the 5,000 of just say that to see what it says if it's 30,000. Okay, 25. That's good. It works. It works. Dividends paid by companies in consolidated group. Subsidiary company dividends paid eliminated in consolidation. Non-controlling shareholders. Okay. When a parent company owns a controlling statements. Preparing, following, and operating period that occurred after the date of a business combination. A full set of consolidated financial statement will be required. Yes, the method used by the parent to carry on its books, its investment, and subsidiaries will affect the consolidating process. Intercompany transactions may have occurred since the business combination. No intercompany transactions may have occurred. The method used by the parent to carry on its books, its investment, and its subsidiary will affect the final consolidated financial statements. Intercompany transactions may have, is not a characteristic of consolidated financial statement. Company transactions may have occurred since the business combination. I'm gonna say C. It's D. Method used by the parent to carry on its book, its statement in the subsidiary will affect the final consolidated financial statements. Okay. It's not. So it will not affect it. But intercompany transactions may have occurred since the business combination. Okay. Which of the following? Let me get some explanation from this. Okay. Let's see. This question is very important. Conceptually, the question asks which statement is not true about consolidated financial statements. The parent's accounting method affects the consolidating process, but not the final consolidated statement. That is the key distinction. Let's make it simple. Suppose the parent records its investment using cost method. Okay? Equity method, big idea. Consolidation worksheets eliminate and adjust things so that, regardless of the parent's internal bookkeeping method, the final consolidated financial statements represent the same economic reality. Okay. I think we can work with that. We can work with that. Parent co-owns 90% of the 10,000 outstanding shares. All right, everybody, it's time for a break. Well, we're gonna take a break right now because it's time to end the study session. I hope that you had some time, blessed time with us tonight, learning something that you didn't know. Yeah. So yeah, I've learned a lot tonight. And actually, it seems like I'm gonna be studying in a night shift instead of early in the morning. I don't know. Tell me what you think. All right. So yeah. So what I'm doing is I'm studying. As you can see on my screen, I have a goal. I'm pursuing a goal, and that's the reason why I am studying. And I believe that you also have a goal that you're pursuing, and that's why you're studying. Right, so let's go ahead and do it. I'll be live every day from Monday through Friday in the morning, sometimes Saturday night, Sundays. I don't have a schedule yet for Sundays, but definitely any time that I have available, I will be live sharing my study journey. All right, I know we can do it. It's possible. Whatever it is, I know it's possible. In these dark moments when no one is seeing you, there is no applause, there are no eyes watching you, there is no one applauding or giving you applause. At this moment, this is the right moment for you to go ahead and build and grow some roots. You know what I'm saying? This is the time for you to grow some roots, to learn, to build yourself, to prepare yourself for the surface. All right? Because God is going to bring you out of any situation you are in. Any situation you are in, God is going to bring you out. The only thing that you got to do is you prepare yourself. Okay? Prepare yourself. So like, putting a few words here. Let's go back to this. All right. So it's in any situation you are in, God is going to bring you out. God will bring you out of the situation. But sometimes our deliverance comes, but we're not ready for it. All right. The moment that is the darkest in your life is the moment of development. It's the moment for you to grow, to build. It's the moment for you to build yourself. In that dark moment when no one is calling you, when you have no friends, when you had no one checking on you, it's the time for you to go deep into building yourself up, because the day will come for you to get out on the surface. But the problem is, if you're not ready, any wind will take you away like a leaf. But if you have built some roots and the wind will come, you will stay firm because you have done what you were supposed to do when you were in the moment of distress, when you were in the dark place in your life. Development is made in the dark, like a seed. A seed grows in the dark, right? A seed develops in the dark, under the ground. That's where the seed starts to develop. And then you see the sprout is coming out. You see the tree comes out and start to give fruits, to be a blessing to many people. Why? Because it starts to develop under the ground in a dark place. If you're in a dark place in your life right now, it's the moment for you to get back to studying. Go ahead and register for school. Go back to school. If you don't have your GED, go ahead and get your GED. If you already have your high school diploma, you have your GED, go ahead and register to start taking classes. Build yourself up, because your moment will come for you to get out of the surface. God is going to bring you out of any situation you are in, and you will come out stronger than how you got in. All right, these are my words for you tonight, words of encouragement to let you know that you're not alone and you're gonna make it. Okay, all right, everybody, have a good night. Thank you very much for sticking around with me tonight. God bless.
Come study with me. Come study with me. Come study with me. Come and study with me. Yeah, late nights, clean notes. I want the whole lot. Gold pen on the page. Big dream, small cage. Put some credential behind your name. Walk in that room and own the frame. This is your time, your season to grow. One step at a time, watch your future glow. Yes, you can do it, yes you can. Rise from the doubt and make your stand. From high school diploma to EA, CPA, DBA, I see the fire, I hear you say, come study with me. Come study with me. Come and study with me. Come and study with me. Come study with me. Put your name on top, put your name on top. This is your season. This is your season. Yeah. Library cards, fresh highlighters, head down focus, future fighters. One more chapter, one more try, one more test, one more why. From high school diploma to EA, CPA, DBA, that's the climb, that's the way. This is my goal, what is yours? Open that door, unlock more. Yes, you can do it, yes you can. No more fear, just make the plan. Put some credential behind your name. Move with purpose, play that game. Come study with me. Come study with me. Come and study with me. Come and study with me. Come and study with me. Put your name on top. Put your name on top. This is your season. This is your season. From the first page to the final light, I want your future to feel this bright. No wasted years, no empty pride, just a bigger life from the other side. Come study with me. Come and study with me. Come and study with me. Come study with me. Put your name on top. Put your name on top. This is your season. This is your season. This is my goal. What is yours? Come build that dream and open doors. Come study with me. Come study with me. Come study with me. Come and study with me. Yeah, late nights, clean notes. I want the whole lot. Gold pen on the page. Big dream, small cage. Put some credential behind your name. Walk in that room and own the frame. This is your time, your season to grow. One step at a time, watch your future glow. Yes, you can do it, yes you can. Rise from the doubt and make your stand. From high school diploma to EA, CPA, DBA, I see the fire, I hear you say, come study with me. Come study with me. Come and study with me. Come and study with me. Come and study with me. Put your name on top. Put your name on top. This is your season. highlighters. Head down, focus, future fighters. One more chapter, one more try, one more test, one more why. From high school diploma to EA, CPA, DBA. That's the climb, that's the way. This is my goal. What is yours? Open that door, unlock more. Yes, you can do it, yes, you can. No more fear, just make the plan. Put some credential behind your name. Move with purpose.